Can you pay a credit card with a credit card? Can you pay a mortgage with a credit card? You absolutely can.
When people see this and they see what we're doing, they go, what the? How are they doing this? We've already done it.
I'm not telling you something. I'm not saying something that we don't currently do. And as I was kind of thinking back through all of the hundreds or maybe even thousands of velocity banking videos I've watched, I don't know that this has ever really truly been explained. And that is, how do you pay bills that traditionally can't be paid from a credit card? Velocity banking is the subject matter. And just to reiterate or re-explain or make sure everyone understands what velocity banking is, it's the concept of your paycheck going into your checking account. And then immediately, once that income goes into your checking account, it goes on to a debt tool. You get to decide what that debt tool is. There's many different types, right? There's HELOCs, I could spell, there's PLOCs, credit cards, there's many different tools. You get to decide what that tool may or may not be. But once you use or once you identify what that debt tool is, the next step is to pay bills from that tool. And when you pay bills from that tool, what does that do? Well, the first thing it does is it pays the when you put your income on to the debt tool, that initial payment that was on that tool is satisfied, which means all of your cash flow is sitting here. Instead of it sitting here doing nothing, it's sitting here. And then once you pay bills from this debt tool, the balance goes back up on the debt tool, but all of your bills have been satisfied. And ultimately, your cash flow ends up sitting on the tool, and that is how you knock out the balance on that debt tool over time. And our personal approach was an evolution. It started with using a credit card to pay our mortgage, using a credit card to pay credit card bills. And it's evolved to using a HELOC to pay our mortgage, a HELOC to pay all of our bills, credit card bills or loans or whatever the case may be. So our process has evolved, but it absolutely started with a credit card paying a credit card. So what I wanted to do is dig specifically into the details of how we specifically do it. Yep. Now, that doesn't mean this is the only way. There are other opportunities out there, but I thought it would be a really good idea to just kind of walk through how we specifically do it. Using the exact same thought process of the exact same example, meaning income is $100. There's two payments. There is a mortgage payment of $25 and a credit card payment of $25. And the balance the balance owed on that credit card is $100. So again, using the exact same example, two payments. You make $100 and you got two payments, a mortgage payment and a credit card payment. Well,
so $50 in cash flow. That's what you're saying.
It will end up being $50 in cash flow. But when the income comes in and all of that income goes into your checking account, that $100 goes into your checking account, and you take all 100. Remember, the balance on the credit card, balance due, not the minimum payment, but the balance due on that credit card was $100. So when I take this $100 and put it onto the debt tool, what happens? We've taken all of the money out of our checking account. So there's nothing left in the checking account. The checking account is now zero. The debt tool has all of your income, all $100. And when you put that $100 onto the debt tool, it satisfied the payment of the debt tool. So there's no payment on the debt tool, but we still have to pay this mortgage. This mortgage, there is $25 owed. And in most cases, the mortgage payment is a direct debit, meaning it comes out automatically every month. You don't have to write a check. It automatically comes out of your checking account every month.
Yep.
So when this $25 comes out of this checking account, but there's nothing in it, what happens? There was a $25 withdrawn from your checking account with nothing in it. So it created an overdraft, a negative balance of $25. Well, what happens? Well, in our personal situation, we have what's called overdraft protection on our checking account. So when this situation occurs, when this negative situation occurs, it triggers some action. It triggers whatever the vehicle is being used for overdraft protection, it triggers it to take action. And that action is, hey, we need to pull $25 from some I'll call it debt tool, but basically it's whatever that vehicle is you're using for overdraft protection. We need to pull $25 from whatever that opportunity might be to pay this mortgage. So it automatically there's no action that we have to take because the balance is zero. When this draft when this mortgage payment of $25 comes out, it automatically generates once this negative transaction takes place, it automatically generates action. And that action is, hey, we need to pull $25 from this debt tool. And that $25 is then going to immediately be placed into the checking account. And so therefore the mortgage will be paid, I'll call it based off a overdraft protection action. So again, 25 is owed. It pulled 25 from a balance that had zero in it, creating a negative situation. And because the checking account itself has overdraft protection on it, it pulled that $25 from the debt tool, which then satisfied that negative 25, which means the mortgage has been paid and the checking account is back at zero. That is the actual steps that take place inside of our own checking account. This hopefully visually walks through how that $25 is paid using overdraft protection. But let me show you actually what's occurring inside of our checking account. This is an actual snapshot of our checking account, or one of them, or I think two of them actually. The first one, again, this is Bank of America, is who we bank with. This is a checking account with a fairly low balance. Oh, the only reason there's $177 in this account and not zero is because all of my cash back stuff goes into this account. All of the rewards go into this account, and then I move them. But what happens is when I open up this checking account, there's this opportunity here. Balance connect for overdraft protection. What that means is, hey, would you like to connect one of your other accounts such that if this balance is ever zero, there is another account that will draft that your account will draft from. So therefore it will create a situation where you have overdraft protection. And when you click this manage button, this pops up. And notice on this checking account, this Advantage Plus banking checking account, there is an unlimited cash rewards Visa. Is the overdraft protection card connected to this account? So if this account goes zero for whatever the reason, if there's a bill that comes into this account that can't be paid by the money that's in it, it will immediately pull from this Visa signature credit card. And this is another account that I'm showing. The reason for showing this account is just mainly because most of our bills are addressed by our home equity line of credit. This is a different checking account. Notice the balance is currently zero. So if there's any bill that comes, any auto bill that comes through this checking account, what's going to happen is it's going to be overdraft protected by our first position home equity line of credit. The home equity line of credit will take care of whatever this amount is. And here's one. There's $0 in this account. And the overdraft protection account is this home equity line of credit. There was a payment that came in on 6/13 of $1128.32. And what you're seeing here is overdraft protection from. So overdraft protection from, this is the account number, which is this account number. Overdraft protection from this home equity line of credit is what paid this $1128. Because if you, again, this was the most that I could grab from the picture, but the item below this was this same dollar amount in red, meaning the account had a negative balance of $1128, and then overdraft protection was used for $1128, which then zeroed the balance. Why? Because this home equity line of credit is protecting this account from being overdrafted. So we're using a home equity line of credit in some cases. We're using a credit card in others. Can you pay a credit card with a credit card? That is doing it. Can you pay a mortgage with a credit card? That is doing it. You absolutely can.
So there have been so many times where you've been on the phone with your bank, educating them on how their products work in order for them to go, oh, I didn't know that it did that. So I want to say that because when people go out there and they call their bank and they say, hey, what kind of overdraft protection do you have or do you offer for my account? You might want to look in the fine print and not rely on somebody answering the phone or the person that you're going to go sit in front of who may say, no, we don't do anything like that. And simply because they just never used it before, not because it's not there.
The questions that we're addressing today looks like this. One, hey, you can't use a credit card to pay with a credit card. And the other being, why would you even use this process, right? Those are two questions that we're addressing. And we address those questions in comments a lot. I think what's missing is there are other questions that should be asked. Like, I think a valid question to ask is, shouldn't there be overdraft fees? Like, if we're using these accounts to overdraft your checking account, aren't there overdraft fees? And the other is one thing that you very rarely, if ever, hear me talk about. We talk a lot about using a debt tool, and that debt tool can be a credit card. That debt tool can be a line of credit. You very rarely hear me talk about the interest on the tool specifically. And here's why. When your income goes on the debt tool, to me, it doesn't matter what the interest is, because when you put all of your income onto the tool, it satisfies the payment. But there is interest being accrued on the debt tool. So I think a better question to ask I think the question not to ask is, hey, you can't do it. I think a better question to ask is, hey, what are some of the details around when you do it? And one of them would be, hey, what about overdraft fees? And the other being interest on that debt tool. And I want to address both of those because I think it leads right into what we've experienced. And that is, we've experienced all facets of this process, meaning, like, are there any overdraft fees? The short answer is yes. And those fees might look like $12 a month. Because you're using overdraft protection, every time your account overdrafts, they're going to charge you $12 for that overdraft. I've seen $12 per transaction. So let's say you're overdrafting your account multiple times within the same month. That means that's multiple $12 hits that your checking account is going to take because it's using this tool.
Credit unions are like that mainly.
Absolutely. In our specific situation, when we started Velocity Banking, I was using a credit card and I was getting hit with a $12 a month, $12 a month overdraft charge every month because I had my credit card linked to my checking account and I was using it. And I was accepting that $12 charge every month because what was I doing? I was doing Velocity Banking trying to get rid of what? Debt. What type of debt? Debt that probably had 24, 22, 36% interest or whatever that dollar amount might be. So that $12 a month I was spending on that overdraft transaction, to me, was worth it to attack that 22, 16, 24% interest of those other credit cards. So it became a logical move for me. But over time, as we put ourselves in a better financial position, there are these other rules that say, hey, you know what? Between all of your Bank of America accounts, if you maintain a balance of X dollar amount, $5,000, $10,000, $15,000, $25,000, I would have to believe it varies from bank to bank. But because we maintain a certain dollar amount between all of our accounts, those zero balance transfer or those fees associated with having a negative transaction in your account, those fees are all waived. So because we maintain a certain dollar amount, that fee associated with, again, that overdraft fee is waived. So we are no longer charged $12 from anywhere to overdraft our account because the dollar amount within the account stay above a certain dollar amount.
Well, and let's talk about that because the dollar amount the amount of money that you're moving every single month, when you call Bank of America and say, hey, just checking in, is there anything you guys want to offer me? That could also just become extra leverage.
Absolutely.
So,
I'm notorious for every 3 months calling Bank of America and just asking this simple question: how am I doing? And they'll go, okay, Mr. Stidham, let's look at your account. And I already know what it's going to say, but I let them go through it and I let them come back with all of the accolades. Wow, it looks like you're doing great over here. You've done these things here. And then I simply ask, do you have any offers? And they may go, hey, we've got this 0% opportunity if you do A, B, and C. Okay, I'd like that. Or I go, hey, credit card X that has credit limit Y, would it be possible, based off these accolades you've just given, would it be possible to increase that credit limit? Is that something you guys might be able to do? Usually the response is, how much do you want? And here's where it's a bit strategic, because if you ask for too much, you're not going to get it. The key is, and I usually do $5,000 increments. And the objective isn't to then use whatever that new credit limit is. The objective is now that new credit limit makes a change to my debt to income ratio. That new credit limit changes my utilization. If it's using that $100 credit card example, if it's a $100 credit card with $100 balance due on a $100 limit, and I increase that credit limit to $500, what used to be a maxed out credit card is $100. There's now $400 of room. That just changed the credit utilization. That changed all of the math associated with how my credit score is assessed. All by just having the credit limit changed. I didn't change my behavior. I didn't all of a sudden have less money on the credit card.
Or make more money.
Or make more money. I just simply asked, can we increase the credit limit? Sounds like there's a question.
Yeah. Oh, this is a comment and I love it. We started Velocity Banking 4 weeks ago and already eliminated $8,500 in credit card debt. Just getting our numbers together and getting honest with our money is allowing us to leverage our money. Love this channel. Thank you so much, Creating Daily. Yeah, I really appreciate this because seeing people put this into action is powerful. But seeing how fast, just 4 weeks.
Powerful.
Yeah, and they're not making any more money. They're not doing anything different. They didn't get another job. They didn't have to start a side hustle. They didn't have to do any of this stuff. They're utilizing what they currently have right now. They're just restructuring it differently. There are levels to this. You do have to be prepared for some of these to move on to the next level, some of them. But infinite banking is not one of them. That's why I say velocity banking is not a wealth strategy. Infinite banking is a wealth strategy.
Can be.
Can be.
It's called infinite for a reason. There are infinite ways to be able to use this cash flow. And some of those ways can absolutely be wealth building. Some of those ways are not.
When we have it all ready, got to make it look good. When we have it all ready, I'm going to send out the Velocity Banking Google Sheets worksheet that you can just make a copy of and customize on your own too. That's free too. Okay. So why are we doing all of this? Because we built a machine that feeds itself. And we want to just teach other people how to do the same thing. We're tired of the gatekeeping. Watch the retirement gamble. And then you'll understand why we're so passionate and why we're out here like this has to stop. If we didn't have access to this information, we would be sitting in a very different place right now. And it was just simply information. That's it. That was the only difference that changed the game for us and for future generations to come. And that is our gift to the world, is to say, we are just going to get out here and start shouting it from the mountaintops. So share this out. Be sure that you've subscribed. We'll see you Wednesday, guys.